Well, good afternoon, everybody. I'm just kidding.
Afternoon.
Good morning. This is Ed Parcaut with Mike Kelly, and we're Real Estate Jerky Daily. Nice to see you back in the studio.
Nice to be back.
Yeah, it makes it
A little bit easier.
I don't know for whom, because your system had to be totally rebooted and updated everything on it. And of course, when it did it, it's like, I'm locked up. Too much information.
Too much.
All right.
What do we got today?
I'm going to go quickly into the weekly inventory. So last week's inventory that they had, so the end of the week, December 8th. So the week from the 1st to the 8th. Inventory went from 555,717 to 546,424. So basically that is in line with normal dropping of inventory this time of the year for nationwide. Same week last year, it was 536,409.
Oh, so we're
actually more than we were last year at this time. So
wow.
So there's a bubble. Active inventory in 2015 was 1,050,971.
Oh,
so numbers are great. They were talking about price cuts and how we have not had the price cuts that we know that in 2022 that 42% of all homes on the market had a price cut. In 2021, 27%. That just meant 27% people went, it's worth $100,000 more instead of 50. And in 2023, we're at 38, which if you go back in the like 14s through the 19s, we didn't have, it wasn't even 38 or 27. It was really a lot lower for amount of cuts.
Yeah. Price reductions.
Exactly.
Yeah. So, and with very little inventory, we're not cutting the price.
There's no
that
bubble,
much.
And it's just going to continue to keep going up and get harder.
And it sounds like a scratched record, but it's the truth.
It is the truth.
I read a couple articles on the plane. Well, I had the person sitting next to me read it to me. They were going to a science fair this weekend this week in San Francisco. They seemed real smart, so they read to me. And there's a couple areas in the United States that looks like they're going to have some price slashing going on because they have a little bit too much inventory. One being, can I remember? One being Arkansas and one being Georgia. And I'm like, really? You've got to be specific little areas where they've got too much inventory.
Well, that's why that new lawsuit in Georgia. I don't have it on here, but they're adding more plaintiffs against. Yeah, it's just adding all local
because of all that collusion that what was it, Louisiana or Missouri decided. That's took them 2 hours. It took our attorney more than 2 hours to read the instructions.
Yeah, what are you going to do? Look, if you look at, so there was an article last week in Medium that said that 44% of properties are being sold to investors, and that whole article went viral because it's a lie.
Yeah.
Wall Street investors haven't bought 44% of all the homes this year.
Yeah.
If you look at the number, I mean, it was so bad that a couple of Democrats decided to go to work last week, and they created 2 new bills to fight this. Both of them to get it to where they stop investors buying them into a large, like BlackRock, those type of companies, iBuyer, those ones. And one of them was to stop them and make them sell them all. The other one is to get them to pay $10,000 for every home they have in one of those things each year as a tax.
Oh, as a tax.
Yeah. So if you have 75 homes in there, you're paying $750,000.
How's that?
How's that? What?
Helping the consumer in any way?
It's not.
Yeah.
It's helping that money would go into affordable housing program.
Sure it would.
Yeah. Just like all the other stuff that we have.
Yeah. All that other money that's going into affordable housing that you see none.
Right. So the House and they both, they jumped on this, and nothing's going to happen from what they said.
Yeah.
But there is affordability challenges. We know this.
Sure there are.
Yeah.
How do we fix that? Oh, build more homes.
Yes. But they're thinking that we could get all those homes back on the market. But it's only about 3 to 5% of the homes are owned by investors.
Yeah. Yeah. And I got to tell you something.
No.
Sellers, unless you need to get out of a piece of property really quickly, don't sell to an investor. You're leaving money on the table.
Right. So investors own 3% of all single family rentals nationwide, but in affordable markets, they own a considerable market share. Like Charlotte North Carolina. I guess Charlotte is North Carolina, right?
It could be South Carolina too.
Oh, what? Okay, so let's say whatever.
Carolinas.
Yeah, they own 20%.
20%
of the housing in those affordable housing
according
areas,
to tax records,
according to the people who wrote this article, CoreLogic and CoreLogic who talked about it. But you still look at investors are buying 26% of single family homes sold in June.
Yeah, sold in
just 26. There wasn't a lot of homes sold in June.
Any investors picked them up?
Yeah, 26 went to investors. The rest of it went to everybody else.
Yeah. Well, I just sold one that I had investors making offers on, and we sold for $50K more than the investors wanted to give. So that's a good thing for the estate.
Yes.
And
would be.
Just like I said, sellers, unless you really have to get out and you want to leave a bunch of money on the table, don't sell to an investor.
They were talking about affordability, how next year it's going to get more affordable because rates are going to come down.
Oh,
somebody in just the last, with the drop in current rates, payments went from, where did it go? I have too much stuff in here. Went from 27.39 to 25.75 in a payment in November, just because of that 1% drop in interest rates.
Wow, that's a big drop.
Well, it's a couple $100.
It helps.
Yeah.
Well, especially when bread is like $200 for a loaf.
That's a slice. But they were talking about how affordability nationwide is down, and they looked at Anaheim, California, and Miami became even more expensive. So on average, in a normal place where it's a $408,000 home, people's debt to income ratio just for the housing went from 38 to 41.4. They must be somewhere else other than here, because ours are like 45 pushing.
Yeah.
And they're saying down in Anaheim, California, and Miami, it is now, for instance, it took 88.3% of a person's income to afford a median price home of $1,222,000, which is up from 80.2% in 2022.
Wow.
It's like, how do you qualify for that?
You don't.
Exactly.
And you're not using, if you're buying that, you're not using traditional financing as a way of doing it.
Not if your median where your income is 88%, it just doesn't work.
It's not going to work.
Yeah.
So
meanwhile, Detroit, Oakland, California, Phoenix, and Las Vegas posted the smallest decrease in affordability.
Wow.
So that means they're going down. You're just talking about certain markets are going to have a problem.
Right.
Austin, Texas is the only metro that became more affordable in 2023, as it posted the biggest year-over-year home price decline of 9.2%.
Wow, that is big.
Well, 10%. So that's $50,000 on a $500,000 home.
Yeah, that's a big jump downwards.
Mm-hmm. Well, everybody got nervous. All those Airbnbs that were there. Airbnb is not going to, that's that whole TikTok thing where it's going to destroy the market.
Yeah,
all Airbnb is going to destroy the market. Yeah,
right. They'll be swallowed up in a minute.
Yeah, please put them on.
Mm-hmm.
All right, so this week we're really focusing on mortgage rates and 10-year. Last week was another week that bond yields and mortgage rate, we almost broke under 7% for a mortgage rates for the first time in a while, getting as low as 7.04. And again, these are Fannie and Freddie, and when they talk about these, usually with some points, just throwing that in there.
Yeah.
We ended the week at 9.09. Again, this is not me quoting rates. I'm just getting that APR thing out there, so I'm not in trouble. But what they're really looking at is CPI this week and PPI this week.
PPI.
Because it's all going to depend on how that comes in.
Yeah.
Right.
Yeah.
So right now we were at 410, but we're actually up today because of Friday. So we're actually, our bonds up about 3 basis points, 4.27, and rates are about negative 19 basis points as of right now, which is not that big of a deal.
No.
Yeah. Yeah. And luckily I worked all weekend.
Why?
Because I had people getting a contract, I had other people looking at stuff, and I want to make sure it worked.
Very, very cool.
And then I worked on all my other podcasts and everything else, because I watched the Navy lose to the Army, and then I had to put a damn Army hat on and take a picture and send it out.
Yeah. And that was a bet with your son?
No, it was a bet with the sheriff and my son.
Oh.
And my son came back and said, "You have to say you love the Army." I'm like, we already made the bet on the hat.
Yeah, we're not doing the other.
Add back. If it was originally is part of it, okay.
Yeah. But
not, you can't add to it. And then
no add-ons.
Luckily, Broncos won yesterday, but they only won because the other team didn't have a quarterback. This week, again, we got 10-year note auction today. Tomorrow is CPI Consumer Price Index and 30-year bond auction to see. So we got 10-year today auction. We got 30-year tomorrow. Wednesday, Producer Price Index, Fed meeting. Thursday is retail sales and initial jobless claims.
Right.
This week is going to really move the market when it comes to what's going to be put out there.
One way or the other, right?
Yeah.
So
we have 50-50 chance either up or down.
Yeah, that statement is never going to be wrong. It's going to move the market one way or the other.
We have 2 inflation points, that we're worried about. That's CPI and PPI to see where they're coming in. And a lot of people or the people I deal with, MBS Highway, and those people, they're thinking that we're going to come in lower than everybody expects.
Look, really?
Yeah, it's not a tenth.
Yeah.
But it's still lower.
It's still lower.
Yeah.
These numbers are true.
That's pretty much all I have. Is there anything about?
I rode on a jet yesterday and just read those few little articles talking about prices going through the floor. They always make them so dramatic, and then you start reading the article, and you're like, oh, okay, you're losing 0.1% of value on your property. Well, that means you're not losing anything. You just can't ask too much more.
Yeah, right. Remember that property I was telling you about that they would never get back to us, so you could show the property. Yeah. Well, they ended up getting an appointment on that day, and I went there.
Okay,
and that house smelled like cat piss. And it definitely is a total like a redo.
Right.
And their pricing, it's got a 20,000 square foot lot, and I'll talk to you about it afterwards. Somebody you need to contact.
Well, and I've got a pest report on it.
Yeah, they're on the thing. It was part of their disclosures.
Okay.
Yeah. It's not something they want because it's too much work. It's all cut up. These people need a ranch style home that has bedrooms at 12 by 12 and no drops.
Yeah, so people don't fall down, go boom.
Well, the problem is like this other one, they actually looked at another one and they had contacted, I'll tell you who afterwards.
Okay.
And they went there and it's like, okay, you got to put a ramp here, ramp here, ramp here. Ramp is like ramp. It's like, it's expensive and it's something that it's not going to work for what they want.
So for the care facility, you're just going to put all the older people on roller blades?
No, you just got to have a more of a level lot. So
yeah.
Don't look in Loma. You got to look over more towards like this, our area, that larger homes,
ranch style, single story,
come in the big front door, because the front door has to be 36 inches. And every door into the rooms have to be 36 inches. That's not how they were made back then.
No, they're not. But an easy fix.
Right. But not, some of these are just the drops and the ramps and everything you have to do is just too much.
Yeah.
And you can see why people are leaving certain homes because they can't no longer walk down this stair.
Exactly. Yeah. It's a fall down the stairs.
Yeah. Or whatever it is.
Well, there's got to be something out there.
There will be. Something.
But they need quite a bit of square footage, right?
No. 2,000, 2,500.
Oh, that would work for them? Okay.
Yeah. It's not that big of a deal. So it just needs, from what they've been telling me and the people that they brought with them that have care facility and buy, and they just have a new one. It takes a year to get that thing. Once you have the house and you do everything, you got a year to get all the licensing and everything done.
Get everything underway.
It takes forever.
Yeah. Well, because maybe you're waiting for the government to do something.
Yeah, exactly.
The bureaucracy. Hey, let's recreate.
And then they keep coming back and go, we need this done this time.
Sure.
Well, why didn't you tell me ahead of time? We could have had it all done at once.
Oh, yeah. I forgot to bring that form.
Yeah. All right, that's all I have for today.
Yeah, you know what? I usually have nothing, but I'll have.
Yeah, Monday is usually not much news day. The biggest thing is inventory is down nationwide, and it's just going to continue this way. The question is, if rates get lower like we think next year, first part of the first quarter,
watch out, prices.
Sellers or buyers going to come first? Is chicken or the egg?
Yeah, we don't know.
I don't know. You had to have the chicken first, right?
Well, someone would think, but how to get there the first time?
I don't know.
Oh, I do.
Yeah.
No, I don't.
I don't know for sure.
I don't want to quantify.
I read books about it.
Yeah. But are they true? Or are they just someone's opinion?
No. Yeah. I'm not going to talk about it here.
Okay, bye.
All right. Make it a great day. Bye.